What's happening, crypto enthusiasts? The market is absolutely electric, and if you're not plugged in, you're missing out. We're seeing massive moves, strategic plays, and innovations that are reshaping the entire landscape. Get ready, because today we're diving deep into the currents of change, bringing you the absolute must-know updates that are making waves right now. From incredible resilience in the face of volatility to groundbreaking new ways to engage with digital assets, this is the pulse of the market, and you're getting it first. First up, we're talking about Bitcoin's incredible staying power. Despite some serious turbulence, demand for futures is soaring, and the smart money is looking for opportunities. Is this a strategic move, and what does it mean for selective long positions? We've got the breakdown. Then, get ready for a mobile revolution in mining. One platform is absolutely dominating 2025 with a high ROI and a commitment to staying on the right side of the law. We're talking about accessibility, transparency, and serious returns. You won't want to miss this one. But wait, there's more. Ethereum is stepping into the limelight, and it seems even Bitcoin whales are taking notice. We're seeing a staggering $2.6 billion move that's shaking up the markets. What does this massive reallocation signal for the future of these two giants? And finally, as Bitcoin navigates its own choppy waters, a new kind of safe haven is emerging. We're talking about real-world asset innovation that's blending physical value with digital technology. Could this be the next big thing to balance your portfolio? Stick around because this is Bitcoin Bulletin, and we're about to break it all down. Don't forget to smash that like button, subscribe, and ring that notification bell so you never miss a beat. Bitcoin stands strong amid market swings. Bitcoin has recently experienced a notable price decline, dipping to around $110,600. This pullback is not occurring in a vacuum. On-chain data reveals a pattern of distribution by mid-sized wallets, those holding between 10 and 100 Bitcoin. This trend became particularly evident after an initial sharp rebound following the Jackson Hole Symposium, which had pushed Bitcoin's price up to $117,300 from $111,700. However, the upward momentum was short-lived, and the weekend saw a reversal, bringing the price back down. Adding to the bearish sentiment, a significant weekly engulfing candle pattern has emerged on the charts, a technical indicator often signaling potential further downside. The lack of substantial cost support below the current price levels, specifically between the current trading range and the $90,000 mark, presents a critical concern. Analysts are closely watching the key support level at $105,000. If this level fails to hold, it could trigger a cascade of liquidations among recent buyers, potentially accelerating a decline towards the $92,000 to $89,000 range. This scenario is further compounded by Bitcoin's historical seasonal tendencies, with the August-September period often characterized by weaker performance, partly attributed to the cultural observance of Asia's Ghost Month. Despite the short-term price pressures, there are strong signals of growing confidence and strategic accumulation. Japanese firm Metaplanet has significantly boosted its Bitcoin treasury holdings, acquiring an additional 103 BTC valued at $11.7 million. This latest purchase brings their total Bitcoin reserves to 18,991 BTC, currently worth approximately $2.2 billion. Metaplanet's ambitious plan includes accumulating a total of 210,000 BTC. A major development for the company, and by extension for corporate Bitcoin adoption, is its inclusion in the FTSE Japan Index. This reclassification from small-cap to mid-cap status integrates Bitcoin-heavy companies more directly into traditional equity markets, presenting a new dynamic for institutional investors who may now face unexpected volatility stemming from Bitcoin price swings within their passive portfolios. In parallel with Bitcoin's market fluctuations, the real-world asset RWA sector is experiencing a significant upswing in interest. The project Avalon X, which focuses on tokenizing luxury properties, is emerging as a prominent player. It offers a unique proposition by transforming tangible, high-value real estate into fractionalized blockchain investments. Avalon X features a capped supply of 2 billion AVLX tokens, with a substantial portion allocated to presale and initial coin offerings, alongside allocations for staking, rewards, and token burns designed to support value retention. Beyond the tokenomics, Avalon X differentiates itself by offering tangible benefits to its investors, including discounted stays at resort properties, concierge services, and entry into exclusive luxury raffles, such as a chance to win a townhouse or a significant portion of a $1 million token giveaway. These incentives are aimed at attracting early participants during its ongoing Stage 1 presale. Analysts are increasingly viewing projects like Avalon X as strategic hedges for investors, particularly those looking to diversify away from purely speculative crypto assets. The combination of Bitcoin's established role as a digital store of value and RWA projects like Avalon X, which offer exposure to real-world assets like real estate, presents a compelling investment strategy. This synergy allows investors to potentially preserve purchasing power through Bitcoin's fixed supply and global liquidity, while simultaneously capturing growth from real asset appreciation through tokenized platforms. The RWA market is projected to expand dramatically, with forecasts estimating a $16 trillion market by 2030, and Avalon X is positioned to be a leader in this burgeoning space. Don't miss how this evolving market landscape is creating new opportunities. Next, we're diving into a mobile mining innovation that's taking 2025 by storm. Mobile mining revolutionizes crypto access. The landscape of cryptocurrency acquisition is rapidly evolving in 2025, with mobile mining apps emerging as a key gateway for individuals seeking to earn digital assets without substantial upfront investment or technical expertise. Traditional Bitcoin mining, which requires expensive hardware and significant energy consumption, remains largely inaccessible to the average user. Cloud mining applications offer a solution by enabling participants to remotely access real mining hardware through their smartphones. These platforms connect users to cloud-based mining pools, effectively leveraging shared computational power. Among the growing number of mobile mining platforms, ETNCrypto has distinguished itself as a leading contender for 2025. Registered in Australia, the company provides transparent, contract-based mining services, allowing users to engage with mining operations through their mobile devices. ETNCrypto's appeal lies in its user-friendly interface, accessibility for beginners, and a clear focus on legal compliance and transparent operations. New users are greeted with a $100 welcome bonus, which helps to offset initial participation costs, and withdrawal thresholds are set at $300, ensuring a more stable and predictable payout structure. ETNCrypto offers a diverse range of mining contracts, catering to different investment levels and return expectations. These contracts are tied to specific mining rigs, with advertised returns on investment, ROI, ranging from 1.5% over a single day for contracts like the Antminer S19XB, up to 40% over shorter periods for more advanced options such as the Volkminer D1, which promises a 38.4% ROI in 8 days. The Antminer S21 plus HID contract, for instance, offers a 30.1% ROI within 7 days. These figures present a competitive edge, offering measurable returns that contrast with platforms that may lack transparency or provide less defined outcomes. When evaluating mobile mining platforms, it is crucial to differentiate between those offering genuine mining opportunities and those that provide only simulated or promotional rewards. ETNCrypto's model, centered around verifiable mining power through legal contracts, aims to deliver sustainable earnings. This stands in contrast to apps that might offer minimal daily bonuses or obscure ROI structures, which may not yield significant or reliable returns for users. Several other platforms have been reviewed in the context of mobile mining. Some integrate mining functionalities with broader investment tools, while others function primarily as trading applications that may offer limited daily mining rewards. Certain platforms, even those backed by established exchanges, can suffer from inconsistent availability or lower return rates. More advanced users might consider platforms like NiceHash, which demands greater technical knowledge, or MinerGate, which utilizes older infrastructure. In the competitive 2025 market for mobile mining, ETNCrypto is frequently highlighted as the most reliable option for beginners. Its combination of trust, profitability, and adherence to regulatory standards positions it favorably against competitors. While 6 distinct mobile mining platforms are available, ETNCrypto consistently ranks highest in user-friendly accessibility and transparent return structures. The platform's commitment to clear contracts and straightforward withdrawal processes further enhances its appeal to a broad user base. Get ready for a massive shift in the crypto world that's capturing everyone's attention. Next, we're uncovering how Ethereum is stealing the spotlight with a jaw-dropping whale move. Ethereum captures market attention as whale moves billions. A significant market event has unfolded, signaling a potential shift in investor sentiment as a major Bitcoin whale has reallocated a substantial portion of their holdings, moving approximately $2.6 billion worth of Bitcoin into Ethereum-related positions. This massive transaction, executed through the decentralized perpetual trading platform Hyperliquid, involved the deposit of nearly 22,769 BTC, subsequently converted into Ethereum. The whale acquired 472,920 ETH in the spot market and simultaneously initiated a large long position on 135,265 ETH, indicating a strong conviction in Ethereum's future performance. This strategic pivot by the whale coincided with a notable price correction in Bitcoin. Within a 9-minute span, Bitcoin's price experienced a sharp decline of approximately 2.2%, falling from $114,666 to $112,174. This sell-off is largely attributed to the whale's large-scale Bitcoin sales, which overwhelmed market liquidity during a period of relatively thin trading volumes. The ripple effect was felt across the market, with Ethereum also experiencing a decline of 4% to $4,738 during the same timeframe. Although both cryptocurrencies saw partial recoveries, the incident underscored the profound impact that large-scale holder activity, often referred to as whale movements, can have on market dynamics, especially in the often less liquid cryptocurrency space. Further analysis of the whale's strategy reveals a sophisticated approach to profit generation. After establishing a substantial long position in Ethereum, the whale began to systematically close portions of this position, converting realized gains into additional spot ETH holdings. Specifically, the whale closed 95,053 ETH long contracts, valued at around $450 million, at an average price of $4,735, securing over $33 million in profits. This was followed by an immediate spot purchase of 23,575 ETH, valued at $108 million. The whale continues to hold a significant derivative position of 40,212 ETH longs, worth approximately $184 million, with an unrealized profit of $11 million, further cementing their bullish outlook on Ethereum. The whale's commitment to Ethereum is further evidenced by the staking of 275,500 ETH, valued at approximately $1.3 billion, on the Hyperliquid platform. This staking activity signals a long-term belief in Ethereum's utility and its potential as a leading blockchain platform. The whale's strategic timing in opening these ETH long positions allowed them to capitalize on market movements, ultimately realizing an impressive $185 million profit from the overall trade. This large-scale trading activity also influenced other market participants, prompting adjustments in their own positions in response to the increased demand for ETH, thereby amplifying price fluctuations. The broader implications of this whale activity are significant, particularly concerning the remaining Bitcoin holdings. The whale still possesses 152,874 BTC, accumulated over 6 years ago, with initial deposits sourced from the HTX exchange. The recent activation of these BTC holdings suggests the potential for further sales, which could exert additional downward pressure on Bitcoin's price. Some market analysts have cautioned that a large, consolidated liquidation of this remaining BTC could trigger a price drop of up to 3.5%, potentially pushing Bitcoin into a bearish market trend. This event also highlights the market's vulnerability to concentrated ownership and the disproportionate influence that large-scale traders can wield. Meanwhile, Ethereum has demonstrated remarkable growth, with its price increasing by 220% since hitting a low of $1,471 in April. This surge is supported by the increasing adoption of Ethereum-based products and decentralized applications, enhancing the network's utility and overall appeal. A notable development in this regard is Kraken's recent deployment of SSV Network's distributed validator technology, DVT, across its Ethereum staking infrastructure. This move represents a significant advancement in building a more robust and secure validator architecture for the Ethereum network, aligning with broader industry efforts to improve scalability and decentralization. This massive whale movement is just one part of a bigger story about evolving market dynamics. Next, we're exploring how a new kind of safe haven is emerging amidst Bitcoin's volatility. Emerging safe haven, real-world assets gain traction amidst Bitcoin sell-off. Bitcoin's recent price decline to approximately $110,600 has brought renewed attention to market dynamics, including distribution patterns among various wallet cohorts and bearish on-chain signals like weekly engulfing candles. Mid-sized wallets, specifically those holding between 10 to 100 BTC, have emerged as net sellers following a recent price peak, indicating a broader trend of distribution across different wallet sizes. The key support level at $105,000 is under pressure, with limited cost support identified below current levels, raising concerns about potential further drops towards the $89,000 mark. Amidst this volatility, corporate adoption of Bitcoin continues to strengthen. Japanese firm Metaplanet has significantly increased its Bitcoin treasury, acquiring an additional 103 BTC worth $11.7 million. This brings their total holdings to 18,991 BTC, valued at roughly $2.2 billion, as part of a larger strategy to accumulate 210,000 BTC. Metaplanet's recent upgrade to mid-cap status within the FTSE Japan Index marks a crucial step for corporate Bitcoin treasury strategies, integrating companies with substantial Bitcoin holdings into traditional equity markets and potentially introducing new volatility considerations for passive investors. While Bitcoin navigates these market conditions, the real-world asset, RWA sector is experiencing a surge in interest, presenting itself as a potential safe haven and a complementary investment strategy. The RWA project Avalon X is gaining significant traction through its innovative approach to tokenizing luxury properties. This project aims to provide fractionalized blockchain investments backed by tangible assets, featuring a capped supply of 2 billion AVLX tokens. A substantial portion of these tokens are allocated for presale and initial coin offerings, with further allocations for staking, rewards, and a deflationary token burn mechanism. A key differentiator for Avalon X is its integration of real-world perks for investors, such as discounted stays at Avalon resorts, exclusive concierge services, and entries into luxury raffles. These incentives, including the chance to win a townhouse in the Eco Valley development or a share of a $1 million token giveaway, are designed to attract early participants in its ongoing presale stages. Analysts are increasingly highlighting Avalon X as a strategic hedge, particularly for those seeking to balance speculative cryptocurrency exposure with more stable, asset-backed investments. The project's deflationary token model and its direct link to real-world utility are seen as significant advantages. The synergy between Bitcoin's role as a digital store of value, often dubbed digital gold, and RWA projects like Avalon X, which offers exposure to tokenized real estate, creates a compelling case for diversified investment strategies. Bitcoin's appeal lies in its verifiable scarcity and macro hedge properties, while Avalon X leverages real estate assets through its tokenization model, providing exposure to growth and potential yield. This dual approach allows investors to potentially preserve purchasing power through Bitcoin's fixed supply and global liquidity, while simultaneously capturing growth from real-world assets via Avalon X's unique tokenomics and associated benefits. The RWA market is projected for substantial growth, with estimates suggesting it could reach $16 trillion by 2030. Avalon X is positioning itself at the forefront of this expansion, capitalizing on Grupo Avalon's advancements, a structured tokenomics model, and lifestyle-backed rewards. These elements combine to create a robust framework for investors seeking both stability and growth potential. By offering tangible benefits such as resort discounts and staking income, Avalon X aims to provide a capital-efficient investment vehicle that could potentially outperform traditional real estate investment trusts, REITs, while remaining intrinsically linked to actual income-generating assets. This innovative approach to asset management is reshaping investment strategies. Now, let's wrap up with a quick recap of all the major headlines. And that's a wrap on today's Market Pulse. We saw Bitcoin showing incredible resilience amid sell-offs with rising futures demand, a mobile mining platform leading the charge in 2025 with high ROI and legal compliance, a massive whale move shifting billions from Bitcoin to Ethereum, and the rise of real-world asset innovation as a new safe haven. If you found this update valuable, give us a thumbs up, subscribe to Bitcoin Bulletin for all your crypto needs, and hit that notification bell so you're always in the know. Don't forget to follow us on all social media platforms for more real-time insights. We'll see you in the next one.